Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Wednesday, January 11th, 2023. We are already over 10 days into 2023, and things are already starting to look much better. I have two thumbs up. You can't see it, but this looks pretty good. And remember, what we saw last year will not be repeated this year. The financial markets are never that easy. That will just repeat one year after another. You get a down year, you get an up year. Very simple. Or a sideways year with lots of rips and dips. But I think 2023, as I've stated before, is a fantastic year for great opportunities. So please use those to your advantage. It is underway. Look at Avalanche, I think up 20% today, something like that. And I'll show you as well how well my crypto trading alerts work, when they went long, how much your profits are. And my crypto trading bot is getting closer to completion. It will trade completely for you. And if you don't like it, it now will also allow you to make your own parameters for your own trading. So you don't have to follow what this guy has made for you. You can make your own as well. It's going to be fantastic. You can do both long only or long and short. The latter, of course, will require a margin account, but it will be fantastic. We'll have to see how many types of exchanges we can connect with. It will be very safe, very secure. Don't worry about it. That is our priority, but it's going to be great. And if you just use my trading alert service and put in like $1,000 for each cryptocurrency over the last few days, long only, you'd make up pretty much for the whole year of subscription. The reason I'm saying this is not to sell you subscriptions. You are already a subscriber. And if you're not listening to this, I highly recommend it to become a subscriber. But I want you to make money. It's a win for you. It's a win for me. You lose money, you lose interest in me. You win money, you keep your interest in me. That's what I want. I want everybody to make money. The big boys are making money, and so should us small fry. All right. So remember, here are all the ways you can use me to your advantage. That's what I'm here for. That's what you signed up for. You don't use it, that's on you. Couldn't care less. All right. It's a tough world out there. We have no participation metals. All right. No crying. Suck it up. Stick it out, and let's go. All right, so here is the bigger picture for Bitcoin. Should still be in cycle 4. Okay, actually, before I go to the charts, I wanted to pull up another presentation. I made it yesterday, and it is about the importance of stop losses. All right, so let's just quickly go over it. So we have two traders, A and B, you and your neighbor. We both buy something at $100, whatever it is. Could be Binance coin, whatever we want to buy. We buy it at $100. Okay, that would really work very well. Where is my mouse? My mouse kind of got lost here. I'm trying to find my mouse. Sorry about that. Oh, come on, piece of shit. So, all right, sorry for the interruption here. I got my mouse back. So the importance of stop losses. So we have two traders, A and B, you and your neighbor. You both buy something, let's say for 100,000, okay? Let's up the ante a little bit, all right? Because in the end, you'll see the difference, okay? So here we go. You sell at $90 for a 10% loss. It means you have $90,000 left. Trader B, your neighbor, holds no matter what. He's a hodler, buy and hold and hoper, diamond hands, you name it. Okay, then the security bottoms at $10. It's a 90% loss and rallies to $200, whatever it is. Okay, remember, you use an analyst like me and you rebuy at 50. I'm not going to claim I'll tell you to buy at 10. Okay, my work does take a little bit longer to assess a bottom is in place. Probably even already at $20, $30, I would have told you the bottom is in because of the work that I provide. And then you sell it at 200. So what did you make? $360,000. All right, here's your Ferrari. What does trader B do? He still doesn't sell, but he now has $200,000. He essentially has half of what you do. So while your neighbor is parading around the block like, oh, look at me, huh? I have made 200,000. You silently laugh because you have made double that amount by simply selling for a 10% loss and then sitting and waiting patiently. Two things to bottom and to turn around. And in the meantime, you pay an analyst like me to wait for that signal. Your neighbor is ignorant and thinks he's the greatest. He's not. This is absolute loss of opportunity and time. Meanwhile, things went from $90 to $10. That 900,000, 90,000, 9,000, whatever the number is, could have put into something else that actually did rally. So the 360,000 is still probably an underestimate. Now you can say, what if I bought it at 70 again? Well, then again, you use your 10% stop loss. You have to go through a lot of 10% stop losses before you get the same amount as he does. Meanwhile, this whole drop to $10 from 100 to 10 was quite nerve-wracking, and your neighbor has already forgotten about it, that he bit off his nails, yelled at his wife, kicked his dog, you name it, all right? Because that is the anxiety that comes with sitting through such large pullbacks. This is the importance of stop loss. Once you apply it, 10%, 20%, whatever your comfort level is, but I would say never more than 20%, you'll do great. If you do a 50% stop loss, of course, it's going to be hairy. But this is something we really, really have to consider. Sorry for the technical difficulties there, but that's sometimes the way things go. Here we go, Cardano. Cardano should still be in this diagonal. I still look for the A, the B, and the C. So far, so good. This was what I saw on Monday, and we're slowly moving a little bit lower for a wave B and then a wave C. This is still the preferred path, and after that we should drop to about 15 cents, something thereabout. So remember, the lower we go, the closer we're going to get to a bottom. Talking about a bottom former, here is Avalanche. Avalanche is up 12% today. I said 20% earlier on. Sorry, that's a little too enthusiastic. It's up 12%. Why am I enthusiastic? Because my crypto trading alert service told us already to go long a week ago. All right, a week ago. So that was at about $12, and now it's at 14. Fantastic. There will be losing trades along the way, but if you can't stand losing trades, then you should be trading or investing in the first place. But always make sure you cut your losses. So this was the diagonal path we were tracking based on simply 3 highs. All right, those lines are of course not set in stone, and we might now have to look for a different type of diagonal pattern. That is our primary expectation. We anticipate, we monitor, and we adjust. So we might have just a simple parallel path. I still remain of the opinion that we have a wave 3 low here, we're in wave 4, and then a wave 5. That would just look better on the bigger chart, but I will not fight the markets. That is why I have my algorithms trading that could not care less about my own insights. They just follow price, and if price goes up, we'll trade it accordingly. If it goes down, we'll trade it accordingly or simply stay in cash. Cash is a great position in a bear market. So the alternative is that we had a, I would say, expanding ending diagonal, quite rare, that bottomed here late 2022, early 2023, and we're in the starting gates of this massive bounce that is going to go to, let's see here, at minimum, I would say $60 to $90. That would be picture perfect. Okay, that would be the preferred bounce scenario before we move lower one more time. So there is plenty of upside left from this puppy. And remember, as long as we hold these lows that we formed here, late December, early January, it can move higher. I still would like to see the 4 and the 5 develop. It would look better on the monthly time frame and all those good things. But again, I won't fight the market because this is a ending diagonal and they can end quite abruptly. There's very few hard rules that apply to an ending diagonal, other that the third wave cannot be the shortest wave. That's pretty much all there is to it. The third wave cannot be the shortest wave. That's all there is to it. But I still kind of miss a 5-wave pattern since the August high. This still looks better like a 1, a 2, and this is 3, 4, and then we should see a shallow wave 5. But good is good. In the meantime, you can easily trade those bigger bumps along the way to the downside. Then we have Binance Coin. I still cannot discern the difference between the 1-2 setup to the downside, followed by 3, 4, and 5, as you can see here, versus the impulse path. Must say the impulse path continues to fill in quite nicely. So as long as we can hold above the December highs, then the bulls are in charge and can potentially give us this first wave in green. Need to see it first, all right? Still early days. Again, we're pretty much back at levels where we were a month ago, where we were 2 months ago, 3 months ago, 4 months ago, 5 months ago, 6 months, all the way almost back 8 months ago. So then the Elliott Wave becomes a little bit less accurate in knowing exactly what's going on. But once we see a impulse pattern develop to the upside, and we break above the November high here or late November high, then I'm much more on board with this new impulse higher. So still early days, but looks good. Again, as long as the December lows holds, this can move higher. Bitcoin, still see no reason to abandon this count here, and that we simply have a little bit deeper B wave. It does mean we should see then a C wave quite quickly. Remember, it was the path A, the B, and the C. Okay, so that is still in play. This is simply what we put on the map as the anticipated path, and then we wait how it fills in exactly. Also here, we are above the 50-day, but we're still in the downtrend channel. We're not even above the 200-day. If we get above the 200-day, things improve drastically. Note that the RSI 5 is at 93, so we're getting quite heavily overbought. So a pullback would not surprise me soon. That could then be the wave C. To be determined. Alternatively, of course, is that then we'll have a larger impulse to the upside here. I still have problems with this decline that started in August. This looks not like an impulse 5 waves lower. I won't fight the market if it is, but it looks better like 3 waves. So in this case, we can still go all the way back here to 25,000. Okay, we can go all the way back here, maybe 23,000. It's fine, somewhere around there, 23 to 25,000 in this impulsive fashion, which is plenty of upside. Okay, so again, simply put, as long as we hold the December lows, we can nicely impulse higher. Crazy overbought, as you can see. So pullback wouldn't surprise me, but also when things get this overbought, the pullback will reset the clock so we can move higher on negative divergence before we get the next larger pullback. Ethereum needs to break off that 1350 level. It is knocking on its door 3 times in a row. Very, very stiff resistance for whatever reason. It is what it is. Above it, and then we get the 3, 4, and 5. That will give us a clean 5 waves higher from the November low, and I would be much more inclined to see us start the next bull market to about 15,000. That would then be 1 of 3 of larger 1. Okay. Alternatively, it is only a B wave. That's why we need to see an impulse higher that's going to hold here back again at around current levels, etc. So I need to see it. Otherwise, we'll simply have a B wave of a ending diagonal. I know it's diametrically opposed. I know that it's not very helpful, but the short term is currently higher. Okay, short term is higher. We're above the 50-day. You can use the 50-day for entry exits. Easy peasy, lemon squeeze. It doesn't get any easier. But note the weekly chart is still below most moving averages. So the weekly chart is still not bullish. We have plenty of positive divergence, but that's only a condition, not a signal. The very last alternative, if we start impulsing higher, is then that we have completed this 4th wave here in blue. Okay, I can also count it in black. It's fine, potato, potato, but it means we're going to get this new impulse higher to 15,000. Ideally, okay, ideally 15,000, but I need a lot more information. I need to know where this first wave here is going to top. That will give us much more indication on where then eventually the 5th wave of this larger impulse to new all-time highs will start. So the monthly chart does allow for this new bull market. Okay, wouldn't surprise me. Everybody's out of cryptos. There's some really nice rallies going on, and most people are missing it. La 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 la. Sorry, but that's what you get if you're not in it. If you're not in it, you won't win it. So here is Matic. Matic is still range bound. That's the problem. We still have these two diametrically opposed possibilities. We're either in this 1-2-1-2 setup, we break below the December lows, then I'm fully on board with the 3, 4, and 5. I can't discern yet if we are potentially in a new bull market. It's way too early, okay, way too early. So this one is very unclear. Similarly to other cryptocurrencies, it's because we're back to where we were in December, November, October, September, August, July, and here all the way back to May. So we haven't done much. So then the Elliott Wave will provide us with a plethora of options, and we simply have to go by if-then scenarios. For now, simply put, as long as these lows hold from December, we can move higher, but I really want to see it move above 95 cents to even start to become more bullish. So I'm 100% neutral on this one, 50-50, okay? Ethereum, same deal, 50-50. Still can trade it, that's fine. We went long January 3rd in our crypto trading alert, still plenty of money to be made. But bigger picture-wise, neutral. Same for Bitcoin, still neutral. Cannot discern either or. Binance coin, still 50% neutral. I cannot discern either or. Can still go long. All these puppies, that's something else, but those are still longer of shorter term trades. Then we move on to Solana. Solana looks great. This has been a ripper as well. This one I remain longer term bullish on, and that we're most likely completing a first wave higher. So this so far looks good. We got our first warning by making a higher high after a lower low. So this looks pretty good. Also here, quite overbought, but I do like to see a 1-2, 1-2, 3-4, 3-4. One more 4-5 sequence, ideally to complete this. Okay. So the crypto trading alert emails, how do they look like? Here are all the ones we track. And then in green, it gives you what you need to do. And yellow is the previous action. So this was then the intermediate term. And it tells you here, Avalanche. It said yesterday, sell a quarter of the 1/4 position. We only bought a 1/4 position in Avalanche. Why did we do it? Well, if I would look at the trend is your friend chart, for example, let's pull it up real quick, see if I can find it for you. If we look at the trend is your friend chart, back then we were below pretty much the 50-day and the 200-day moving average. So that was still bear market behavior, okay? In the sense that this is not yet a full-blown bull market. If prices start going above the moving averages start to align bullishly, you can increase your position size. This is why I keep saying trade accordingly. In bear market rally should be traded in a small position. You know, get what you can. A bull market rally should be traded in a big position. So that's why we said only a 1/4 position according to my algorithms. And then eventually we sold some positions. We sold, let's see here, yesterday, and again we'll sell today. And we're still long quite a lot, okay? So that's great. Now we're just let it ride out. It's fine. It is still uncertain times because of where, of course, Avalanche is in relation to these technical indicators. It's in the cloud. It's just above the 50-day, still below the 200-day. So this is still a sell the rip environment, and that's what my algorithm is doing. All right, we sell it, and this will teach you proper trading. You all you need to do is wait for the email to pop up and trade it accordingly. But this will teach you proper trading. We don't have to throw everything at the kitchen sink and at it thinking, now we've nailed the bottom. No, patience. Once price improves and improves, the algorithm will keep you by the hand and increase your risk as well. Because it's all about proper risk management, nothing else and nothing more and nothing less. So Ethereum, the same here. We went long already January 3rd, and we're up 10%. We sold already in strength. Why? Because also this chart is still not a 100% bull market according to the trend is your friend. You take those parameters into account, you trade it accordingly. In a bear market, you take any profits you can get. Okay, so that's pretty much where we're at. Again, I'm not trying to sell this subscription. I really want you to know that there's many ways to make money relatively easy. There will be losing trades along the way, of course, and there might be even weeks and months where there will be no trades if you can't short these cryptocurrencies. It's fine. Then you just sit on your hands and you wait and you pounce. That is how lions hunt, all right? And their hunt is not always successful. So with that, thank you so much for listening. Sorry about the technical difficulty there where my mouse decided to disappear. Microsoft, fantastic. I hope you got the message. So still 50-50, still on the fence regarding are we still in the bear versus in a new bull for many of these cryptos because we're still pretty much at levels where we've been for many, many months. That doesn't mean you can't trade it. As long as the lows we've made last month or this month hold, higher it is, I have remained bullish short term, and that was still the correct point of view, and I'll remain so. I see no reason to turn bearish. We need to see 2, 3, 4, 5 daily candles in the red that really pretty much destroy all the gains we've made to turn bearish short term. Long term, I cannot discern yet if a new bull has started, except for Solana. Solana, I'm still the most bullish about. Believe it or not, I mean, it's the FTX Alameda coin, but it's rallying, and that needs to be respected. But also there, proper risk management. Never ever throw everything in the kitchen sink at it. Start small, increase your positions. Never average down, always average up. Have a great rest of your day. Take care, trade safe, and I'll see you all on Friday. Bye.